Okay, I'm gonna try to do at least one trade with Nadex using this charting system. It's gonna be a 5 minute trade. I know a lot of people do not like to trade 5 minutes because the market is so volatile, and with Nadex, the margin is so small as far as just strike price options and that. I actually really love trading 5 minute trades. I like getting in and getting out. So I'm gonna try. I usually don't trade on Fridays, but I had some downtime, so I'm gonna try to see if I can pull at least one trade out just to show you what a trade being executed on Nadex would look like. I haven't checked the market to see what type of market conditions there is today, because like I said, I normally don't even log into Thinkorswim or Nadex or anywhere on Fridays, but I'm going to try to do it now and see if I can get a trade out. Before I do go over to Nadex and the actual charts put together, again, I'm going to go ahead and explain the different components of uh, the charts that I put together. And the way you're going to see it on the charts, all of these things are going to be put together on one chart. I just separated it to kind of explain what you're looking at when you're looking at these charts. So, um, the main part of the charts are going to be the pricing candles here. The candle goes up, and the candle is green when the pricing goes up. The candle is red when the pricing goes down. So those are just basic candles. These are 1 minute candles for 5 minute charts, or 1 minute candles for 5 minute trades. This what you see here and here are support and resistance levels. This is resistance. This is support. If you take a look, typically where you see your resistance levels, you'll see the market begin to go down at this point. Where you begin to see your support levels, typically the market goes up. And what generally happens with the market is once if you're looking at a resistance level and you get a green candle that goes past the resistance level, typically the market is just going to continue to go up from that point. If it breaks through the support level, then typically the market is going to go down from that point. Um, so that's this part of the chart. This part is what we call an oscillator. Basically, all it does is just goes up and down as the market moves. So as the green line plots over, excuse me, the red line plots over the green line at the top of the chart, which typically I only make my moves when it happens at the top, the market goes down. When the green line crosses over the red line at the bottom of the chart, the market goes up. If this happens, any cross in any either two of the lines cross anywhere in the middle of the chart, I typically won't take a trade. I take the most extreme levels, which is the top. Like here's the bottom. So here's a good example. The green line crosses over the red line at the bottom, and you see here, this is about where it starts, and the market went up for the next 1, 2, 3, 4, 5, 6, about next 15 minutes at least right now. So this is where I would enter the trade if everything else lined up. Let me find an extreme point from the top. Here's one. It's not all the way at the top, but it's close enough to the top. Here's one that is all the way at the top. The red line crosses over the green line, excuse me, at the top of the chart, and the market goes down. Here's where the crossing happened. The market goes down from 812 to at least 840 from what I see, 842, 843 or whatever. So I take extreme crossings. I don't do them when it's in the middle because it's too unstable. Here's another one. There it is. Crosses at the green line crosses over the red line at the top at the bottom. It's 720. The market goes all the way up for 25 minutes. So at least. And then at some point it's going to end up coming back down, and here's the point where it comes back down. Crosses over here and it goes down. So this oscillator by itself is a very strong indicator as well. Um, the next one is here. This is where you're going to get your breakout indicator, which is it's one arrow. It either points up or down. If it points up, that means the market's going up. If it points down, that means the market's going down. Now, how long it's going up or down for? You can't use these arrows by themselves. You absolutely need to have the whole system put in play. I'm just explaining the different aspects of the charts, and then once we put it together, you'll see how you can do these 5 minute trades. So for instance, here you get the breakout arrow. and the market did go up, but it went up for probably about 15 minutes. Here you get the breakdown arrow. The market went down from here, but only for about 8 or 9 minutes. So the arrow alone is not an indicator at all. It's just a part of the entire system. All right. Back over to the main chart. We have two histograms that I use. When I'm taking a trade, if it's going to be a buy, when everything else lines up, part of what else has to line up are the histograms. The two different histograms both have to close in green in order for me to take a buy, and close in red in order for me to take a sell. And now this is along with everything else, but this just this one component. So if you look here, both of these close in green at this point here, right here. So, well, actually right, yeah, here is where it closed in green. So if everything else had lined up, I would be getting in the trade at this point, and you see the market moves up for about 15 minutes. Okay, let me find another one where the market moves down. Okay, here's one here. The market closed here in red. So I'd enter the trade on the next one. The market went down for about 5 minutes, and then it started moving back up. So the market does move in the direction that it says, but the key is knowing the time frame that it's going to happen. So none of these components work by themselves. They work well by themselves, but it's hard to measure when you're doing binary options, because with binary, everything is based on time. When you're trading Forex, the market's moving up and down, and you can set your stop losses and that type of thing. That's not a thing necessarily with binary, although with Nadex, you can exit a trade early. Um, if you're in profit, you can take your profits and go, or if you're losing the trade, you can take your losses and go, minimize your losses and then go. All right, the last part of it, these are Japanese candlesticks. Um, and basically, they cut out market noise, so they're not like these candles are actual movement, the regular candles are. The Japanese candles pretty much cut out the market noise, and you're just seeing what the actual market is doing, minus the short movements, the unnecessary movements that you don't really need. So in this case, where you see the market where you see the candles are green, this is telling you that this is a serious uptrend. When the candles start getting smaller, that's letting you know that the market is about to go on a downtrend. I'm sorry, that's one of the indicators on the other screen. Um, so where you see the candles start getting smaller, you know the market is going to be on a downtrend. Here's a short downtrend, but let me look back and see. Here we go. Here's an uptrend. The candles start getting smaller. Now we're on a downtrend, smaller, and then going on an uptrend. So that's kind of what the market just does all day, is goes up and down. When you enter the trade, while you're looking at these to close in green or red, this is going to be at the bottom of your screen, and this also needs to close. It needs to match the green or the red. So the point is, when all of these components match up together, that is when you're going to enter the trade. Now, these are 1-minute charts, again, for a 5-minute trade. So what we're doing is, because the way Nadex works is your trades are timed. So you have a trade that starts every 5 minutes and it ends every 5 minutes. So if you happen to get, because these are 1-minute charts, the first thing you're looking for, you're going to get an alert when the arrow pops off. That everything is surrounded around that. Once you get that alert, that is when you take a look at your oscillator, your histograms, and your Japanese candles. And if everything matches up, you enter the trade. Now, if you get this arrow on the first or the second minute of a 5-minute time period, you look at your Nadex pricing, and if pricing is okay, you can go ahead and get in the trade at the current 5-minute period. If you get the arrow on the fourth or the fifth minute of a 5-minute period, you're probably going to want to wait until the next 5-minute period begins. Now, it's okay, because when you get this arrow, this means that this is an uptrend. It's not necessarily for the current candle, because these are only 1-minute candles. It's actually meaning that the trend is going to change and go up. The way these arrows works is you're never going to see two arrows pointing up simultaneously, or excuse me, consecutively. So the next arrow that's going to be on this currency pair is going to be a down arrow. Like this one is a down arrow, this one goes up. The next one we see is going to be a down arrow. The one before it was an up arrow. Let's go back and look. There's your up arrow. So what it's telling you is that the trend is about to change. So when you get that the trend is going to change, you don't necessarily have to get in the trade on that particular candle. You are going to wait until everything lines up before you enter the trade. And that's pretty much how the whole system works as a whole. Oh, and also we discussed the first and the second minute and the fourth and the fifth. If you get the candle, or if you get the arrow on the third minute, you're gonna have to look at the pricing because that could either be the current candle or you might end up waiting to the next candle. I do the third minute rarely. If I get an arrow on the third minute, I rarely even take it at all. I'm either preferring the first or the second or the fourth and the fifth. But again, it just depends on the pricing. With Nadex, I take profits around anywhere from 25 to 45 or $50 profit. So if you have questions about pricing, I have a whole training set up on that, so you can just let me know. And I'm sorry, that's how the indicator sounds when it's going off, but it's on the other screen, so I'm gonna go there in a minute. So pretty much that's it about these charts. I'm gonna go and here's the charts, and this is what it's gonna look like. Um, for instance, okay, just because it's here right now, I would not take this trade at all because if I'm taking a sell, I need for this oscillator to be up here. So if it's already down here when I'm getting this arrow, that means that this downtrend is not going to last much longer because this is about to go back up again. So I wouldn't get in this trade. This one is another one. I wouldn't get in this trade because for the same reason. The oscillator crossed at the top way over here. So here is your downtrend here. I need it to be at the top. This one, I wouldn't get in the trade for the same reason. And if these trades will probably win, I just take less less risk. But I'm gonna take a look real quick. We're in the third minute of a 5 minute candle. I'm just gonna look at the pricing real quick. This is USD JPY. Yeah, see, it already happened. The pricing is way too low. It's only a 25% profit. So I wouldn't have taken that trade anyway. We're gonna wait until we get another signal, so I can start from the beginning. Now, if I get an arrow here, I wouldn't take this trade because these two don't line up. Although this is correct. Now, by the time I get the arrow, if the next um, candle is green on these, I would probably go ahead and enter the trade. Well, not the next, the next candle because it's the fourth minute of a 5 minute candle or the 5 minute trade. So I'm just gonna wait until I get a good signal, and then we're gonna go ahead and enter the trade, and then you'll see how it works. So I'm gonna pause the video just until I get a good signal, and then I'll come right back. Okay, I did get a signal here. I don't really want to take this trade, but I'm gonna go ahead just so we can get in the trade. I would take a sell on this because everything lines up. Let me get in the sell and then I'll explain it. That was the Aussie JPY because it's only a $17 profit. I would want a much higher profit, so I'm gonna go ahead and take the trade just to execute it. I normally don't take trades with a $15 profit with using this system, but I just want to show you how it works. So I got in the trade, and you're normally gonna be getting in on the third strike price. So the strike price I got is 7939, and the indicative right now is 79375. It's only a $14 profit. I'm typically trying to get at least $25, but I'm just trying to show you how to execute these trades. There was another one that went off. Okay, let me try this one. Again, the oscillator is down too far for me, but I'm just trying to get in the trade. So this is the GBP JPY here. The profit is $32. I'm just going to go ahead and enter the trade here just to see what happens with it because to me the oscillator was down too low and the market is about to go back up, but everything else did match. So we're just going to see. Now what's going to happen is the market is going to go up and down while you're in the trade. We got like 4 more minutes left to go. This should continue to go down just a little bit before it moves up. You know it's going to start moving back up when the red line comes all the way down. The green line is going to cross over the red line and then it's going to start to move up. I wouldn't take this trade at all because this is way out. This is not in the right place. It looks like it's kind of going back down, even though you got the white arrow, which is going to come back. The one that points up is going to come back. So let's look at the trades and see what they're doing. This trade is still winning This trade is still winning also. When you see a negative here, it doesn't mean you're losing the trade. The way you know whether or not you're winning or losing the trade is by looking at the indicative index. Now it's tied. It's at 0.73, and that is my strike price. So we're going to see if it just goes back down. If this trade were to lose, it really would be because this was too low and it is starting to head back up already. So we'll see. We'll just see how the trade ends, and then the next trade I'm gonna do is gonna be more in line with what I normally do. So if it loses, it'll be a good example of why not to get in the trade there. But it is winning actually. So it's winning by 2 pips at this point, and we're just gonna wait it out. This one is definitely winning by quite a few pips there. So we're just going to continue to wait on that. Again, I knew this arrow was going to come back at some point. So it's back now, but I still would not get in this trade, even though everything else matches up. It's just too far to what is going to be the resistance line at the top. It's definitely going to come back down sooner than later. So I'm not even, if you have to second guess, then it's best not to get in the trade. This is the trade we're currently in. This is where we got in the trade. This is where the market is now. So you can see here we are winning. The other one was, and look, it's winning actually by $21. If I wanted to get out of these trades, I could take $22 or now $27 in profit. This one I could take $11 in profit. I don't have to stay in the trade to the end. I'm only staying in the trade until it ends, just to show you how this works. This is a $40 profit trade. This is about average for my trades. This one's only 14. When these two trades win, this will be 40 plus 14, be $54 for 5 minutes. Minus the fees, which would be a total of $4. So we're looking at like $51. Both of these trades are going to win. The trades end in less than a minute. And so we're just going to watch it go down. So this is at 368. The price was 39, so it's at 36. This one is 73, and now it's at 725. And the reason why you would probably want to get out of the trade is because this is the stock market. You might want to just take your money and go once you get up to as high as $25. Now it's saying that it's in the negative now, but the trade is still winning. It's going to be very close, which is again a good example of why you want to get out of the trade. And then again, today is Friday, so the market is kind of volatile. I never trade Fridays, but I wanted to make this video. So we got 15 seconds left, and if this is really close, it's only by 1 pip. But again, this was a trade that normally if I was trading, I wouldn't have taken anyway, just because of where the oscillator was located. But both trades did win right here, as you can see. So that would have been $51 in about 4 minutes. Okay, or excuse me, 5 minutes. I'm sorry. Okay, so that's pretty much how these charts work. I'm gonna try to do another couple of more videos, showing you the setup of the actual trades that I really would take. You know, because like I said, that this one here I would have taken, which I forget which currency pair it was. I would have taken it, but the pricing was, it was only a $14 profit. And then the other one I wouldn't have taken it because the oscillator was not in the right place, but it won anyway, because I like to take the trades that I know have the most probability of winning. Okay, so that's pretty much it. If you are a current client of mine, please contact me back if you're interested in getting this chart set up. If you have never worked with me before, my email address to contact me if you want the chart set up is youngcommerce@gmail.com. youngcommerce@gmail.com. And I would love to work with you. Again, I know that a lot of people don't like doing the 5 minute trades, but I absolutely love them. I can get about 10 trades done in about an hour, and then I go on about my day. So if you have any questions, again, it's